There's two clear trades that we're preferring at the moment. There's a bit of a barbell. I think there's no real broad consensus on the direction of rates of growth and inflation. So what we're doing is finding two specific sectors in the US market that can play to that indecisiveness. One is US financials, a big beneficiary of the likely deregulation we're going to get from the Trump camp. And the second is utilities. Now, utilities are a little bit more controversial, but there's a fundamental support from the aggressive increase in power demand on the back of the AI boom that we've seen, not really talking about the probably anti-ESG from the Trump campaign. So those two areas are where we're looking to quite supportive towards.
Utilities are an interesting one, and we've seen that data center build out and the energy usage theme very clearly in this region, especially in Malaysia. But from a US market's perspective, Mark, isn't that we've seen that's where the outperformance is? Isn't it looking a bit too crowded at this point in time and due for a pullback?
Yeah, I mean, in terms of how we assess every position in portfolios, we look along four pillars. So fundamentals, the policy backdrop, sentiment and valuation. And yeah, we are on the alert for that sentiment pillar becoming too euphoric. We don't find it just about there yet. We think we can run quite well into the year end and into January. But I think January we've got to reassess more broadly the sector exposure, the broad market exposure, once we get clarity around what the policy outlook is likely to be.
So it's not clear then, on balance, as to whether we are heading into a meaningfully stronger dollar environment or meaningfully higher